In the past few days, global stock markets have crashed. Again, the Dow Jones, the S&P 500 and DAX red everywhere. And now the question I keep getting in: will Dubai real estate crash too? If you are thinking about buying, selling or holding property in Dubai, you must watch this video till the end, because today I'm going to tell you what happens next and what smart investors should be doing right now. I'm Elena Yurgeneva, your trusted real estate advisor, and I work here in Dubai since 2007. Let's look at what just happened. Across the world, stock markets dropped sharply following President Donald Trump's announcement of new tariffs. Uncertainty, fear, risk aversion, classic panic mode. In this environment, investors usually start pulling back from everything: stocks, crypto, even real estate, depending on the market. But Dubai is not like most markets. It's unique and it responds differently. First, here's what many people don't realize. Real estate is a highly delayed market. It doesn't crash overnight. It doesn't react in hours like stocks do. Most property markets, and especially Dubai, take 4 to 6 months to show any reaction to global economic events. Which means that if we are seeing a crash in April, the effects of the Dubai real estate market, if any, will likely be felt in October or November. So don't expect immediate discounts or panic selling tomorrow. That's not how this market works. Let me give you a real-world example. In March 2020, the world shut down because of the COVID. Stock markets collapsed. Panic was everywhere. And in Dubai, transaction volume did drop. In Q2 2020, we saw a 50% dip in activity. But guess what? By 2020, the market began recovering, and by 2021, Dubai recorded over 39,000 new residential units, an 8% increase year over year. Prices surged across key areas like Palm Jumeirah, downtown, and GVC. Why? Because Dubai took action. Visa reforms, 100% foreign ownership laws, business-friendly policies, and one of the fastest reopenings in the world. Also, developers started to offer more flexible installment terms, post-handover payment plans. Unlike many Western markets that are saturated or over-leveraged, Dubai is a cash-first market. That alone makes it less volatile. There is also a strong demand from international buyers: Europe, CIS, India, China, all looking for safety, lifestyle, and investment security. Most importantly, there is no property tax, no capital gain tax, and no restrictions on rent returns. So even if global turbulence hits, investors see Dubai as a safer long-term play. So what to do? If you are a seller, first, don't panic. The window to exit at high prices is still open in Q2 and Q3. Price realistically, but don't undersell out of fear. The market is still strong. If you're a buyer, don't wait for a crash. If the stock market volatility continues into Q4, there may be discounts on select units, but not everywhere. Focus on quality, beachfront, branded, low supply, high demand areas, and buy with long-term ROI in mind, not short-term speculation. Dear friends, I've been working on this market since 2007. Global stock markets are emotional. Real estate is rational. Think strategically. Dubai isn't immune, of course, but it's built differently. It recovers fast, it protects capital, and it continues to attract global wealth in the long-term perspective. If you are looking to buy or sell and you want someone who understands both global economics and local opportunities, reach out. My team at Alpha Star Properties has helped clients navigate these cycles since 2007. And of course, don't forget, subscribe to this channel and hit like button. Let's protect your wealth and help it grow. As I already said, real estate doesn't crash overnight. Dubai's market reacts differently than stock market. Today, I'm taking you deeper. If you are an investor, this is your strategy playbook: where to buy, what to avoid, and how to protect your money in a world that's getting more volatile by the day. Despite global panic, Dubai's market remains strong for now. High demand from international buyers, a record of planned sales, developers still releasing luxury inventory. But we are also seeing early signals of selective slowdown. Some overpriced units sitting longer, buyers negotiating harder on payment plans. This is normal. It's not a crash, it's a cooling in certain overpriced pockets. So, what smart investors are buying right now? First of all, Palm Jumeirah, ready villas and branded residences. Still limited supply, strong international demand, safe haven for capital. And now you can negotiate. Dubai Islands, beachfront, lower prices point, long-term potential, ideal for 2-3 years hold entry sale strategy. Villas communities, great for family buyers and end users, because again, it's a long-term investment, 2-3 years. In Q3, Q4, we might see motivated sellers, chance for you smart buyers. Pay attention at DIFC and downtown west areas. Watch this space. Upcoming mega developments will shift the city's core again. Now, areas to avoid if volatility continues. I always tell my clients, not every project in Dubai is worth your money. What to avoid? First of all, areas with oversupply, generic towers in GVC, Arjan, Dubai Land, too much supply, low yield, resale struggle, off-plan with long delivery timelines, weak developers, uncertainty plus risk, not the time, units without unique value, no view, poor layout, no parking. In a slower market, these are first to get dumped. Now, investment strategies that work in times of uncertainty. First, buy and hold with high yield focus. Look for 7 to 10% net yield, short-term rentals, furnished units, serviced residences, preferably beachfront or walking distance to Dubai Mall. Second, mid-term flip up to 24 months of plan to ready. By now, sell before handover once project appreciates, but only with high demand products. Number 3, bulk investment if capital allows. Buy multiple units, floors with developer discount, hold, then sell individually later. Works great in Dubai with right negotiation and right timing, of course. 4, equity preservation. Luxury villas. Focus is not yield, it's capital protection. Even in downturns, these assets fall the last and recover the fastest. Think Bulgari residences and Royal Atlantis. In 2020, I advised my clients to buy while others waited. Those who listened made 30 to 40% by 2022. In 2025, please don't panic or freeze. It's time to be strategic, to do your homework and work with someone who understands the full picture, not just what's trending on Instagram or TikTok. I spend every day negotiating with developers, analyzing new releases, talking to real buyers and sellers. If you want to grow your portfolio, this is your time to move smartly. Dubai is still one of the best real estate markets in the world, but only if you play it right. If you want a private strategy session with me on my team Alpha Star, use the link below. Let me share a real-life example. In January 2020, just before COVID hit, I showed a villa on Palm Jumeirah to an ultra-high net worth buyer. He loved it, and by February 2020, he signed the Form F, paid the deposit, and was ready to go. But then the world changed. Markets collapsed. Panic began. He got scared. Buyer walked away from the deal, thinking the villa price would crash. But the seller didn't lower the price. In fact, by the fall of 2020, just 6 months later, prices on Palm Jumeirah villas began to rise. The same buyer ended up buying the exact same villa almost a year later. Only now it cost him more. First of all, he lost his 10% deposit check because the seller cashed his check after the buyer failed to complete on time. And on top of that, buyer spent a full year renting a villa, over 1 million dirhams. So what was his loss? First of all, deposit 10%, a year of rent, more than million dirhams, and the chance to own a home that was already his. Since 2020, prices on Palm Jumeirah increased by 90%, according to CBRE and Property Monitor. Some areas, like front villas and Bulgari mansions, have more than doubled. This is what I call the cost of waiting. When fear controls your decision-making, you don't save, you lose. What to do if you are looking for a discount? distressed deals. Now, if you are someone waiting for a crash to buy cheap real estate, you don't have to wait for a global stock market collapse. In Dubai, payment plans are standard. Many investors buy 2-3 units of plan and overextend. And when they can't keep up with the installments, they list the unit for sale at cost or even below what they pay to the developer. This is your chance as a savvy investor. What this means: distressed deals are available all the time, not just during crisis. These are sellers who need to exit fast, recover cash, and willing to offer serious discounts. If you want to access to real-time distressed units, villas, apartment, bulk units, just message me privately. You will find all my contacts below this video. We are not waiting for Wall Street to crash. We are finding real deals today from real sellers with real motivation. And if you want to understand the full picture, click the link below and download my book Ultimate Guide for Investors in Dubai Real Estate and join my investor list. This is not the time to sit on the sidelines. This is the time to move smarter than ever. Thanks for watching. See you in the next one. And don't forget to hit like and subscribe button.